Hi there, welcome to Kneppy Invest. Bit of an impromptu video today, sort of an emergency video, call it what you will, but what's happening in the United States right now in their markets is really fascinating. So even though it's only been a few days since I did a State of the Markets video, and in that video I did mention I was fairly neutral. I had been bearish, had become a little bit more neutral, but definitely what's been happening in the US markets over the past 3 trading days, I have become a little bit more bearish. And every day when I wake up, the first thing I do is look at what's been happening on the overseas markets, in particular the Nasdaq and the S&P 500. And when I woke up this morning on January 21st, the Nasdaq was up 1.3%. And I didn't think that was unusual because I did think there was going to be a little bit of a bounce. And I took the dogs for a run, which took me about 2 hours. And the first thing I do when I come back after feeding them and getting myself a nice, cool, refreshing drink is I go back to see what or how the American markets closed at. And I saw that the Nasdaq was down 1.3%. And initially I thought that was a mistake. That was what happened the previous day. So I refreshed my screen, but no, the Nasdaq was down 1.3% after being up as much as 2% during the first 90 minutes of trading on January the 20th. So the bears are currently winning in the United States. And when I'm talking about bears, I'm not talking about the Chicago Bears, or maybe even the North Sydney Bears, because the North Sydney Bears colours are black and red. I'm talking about this sort of a toing and froing between the bears and the bulls. And the bulls have been winning ever since the end of the COVID-19 financial panic, but things could be turning around. So let's get stuck into the video. But before we do, I'm just going to go back to my last video and show you where the Nasdaq was at that point in time. Before we get into discussion of this particular chart, looking at the Nasdaq daily up until the end of trading on January the 14th, just want to mention that when I'm talking about the Nasdaq, I'm looking at the NDX, which is the Nasdaq 100. Most people, when they talk about the Nasdaq, they're looking at the Nasdaq Composite, which is IXIC, if I remember correctly. Not a lot of difference between the two. They are looking at different, so the Nasdaq Composite is broadly the Nasdaq, or the companies on the Nasdaq, while the Nasdaq 100 is just looking at the biggest 100 companies on the Nasdaq. And there are not much differences between the two charts or indices, but there's one subtle difference between the two, and that is when you look at it over the past few weeks, the Nasdaq Composite is a little bit more bearish than the NDX, but I do focus on the NDX most of the time. Anyway, back to this chart, and this goes back to about September 2020. And what I'm trying to portray in this particular chart is all the buy the dip opportunities the Nasdaq has provided to investors over this particular time period. In fact, there have been 5 up until recently. And these 5 buy the dip opportunities occur when the Nasdaq or the NDX gets towards the 100-day moving average. So I have 3 moving averages here. You can ignore the 25 and the 50 and just focus on the 100-day moving average, which is the purple bottom line. And we have seen on those 5 occasions when the Nasdaq or the NDX moved towards that moving average or even fell below it for a brief period of time, which did happen on the last 3 occasions, a lot of buying came in, and then on most occasions, not all the time, the Nasdaq went on a nice little bull run for a brief period of time, say 3 to 4 months. Now let's have a look at what's been happening with the Nasdaq over the past few months. So I'm just going to zoom in onto this particular chart just to have a closer look at this shorter time period. In this particular chart, we're only going as far back as April of this year, but we do see 2 buy the dip opportunities between April and October of 2021. The first one was back in May, and we actually saw the NDX fall below the 200 or 100-day moving average for a brief period of time, and then we saw the Nasdaq go on a nice, about a 5-month bull run up until October. We saw during September the Nasdaq slip away a little bit, and again it fell below that 100-day moving average for a brief period of time. And then during the end of October into the start of November, we saw the Nasdaq go on another bull run. So that's the second buy the dip opportunity in October. But since the top in the market, or the Nasdaq, which was reached in the middle of November, the Nasdaq has been struggling. There was another potential buy the dip opportunity in December, and then over a 5-day period, we saw the Nasdaq go on a run as soon as it hit that support level, which is the 100-day moving average. But it struggled to get up past the previous high in November, and then we saw a very big sell-off at the start of January, and then in fact the Nasdaq went below the 100-day moving average. And then as soon as it went below the 100-day moving average, there was a lot of buying came in. And we can see that on that one candlestick, that green candlestick with that long tail. That is telling us that at one point in the day, the Nasdaq was down big, but then a lot of selling came in late in the day, and it drove the Nasdaq higher. It drove the Nasdaq towards the 100-day moving average. The next 2 days, it moved above the 100-day moving average. And then recently, I think it was January the 13th, we saw another big sell-off, and the Nasdaq fell below the 100-day moving average. And this is telling us that this buy the dip opportunities we've seen over the past few years, ever since COVID-19 financial panic, has been losing steam. And even though I was not bearish at this point in time, I was neutral, the fact that we did see that big sell-off and the Nasdaq struggling to remain above the 100-day moving average was an indication that there could be a bit of a turn in the market in the near term. So let's have a look the last few trading days to see if that turn has happened. Now onto the updated chart for Nasdaq, or the NDX. This is up until the end of trading on January the 20th, which was the Thursday. Monday was a national holiday in the United States because of Martin Luther King. So we've only had 3 days of trading. Now, because I was neutral, I was not sure about where the market was going to start out at this week, because I thought there could have been a bounce if those buy the dip investors had enough strength in numbers. I did not expect 3 big down days on the Nasdaq, but that's exactly what we have seen. 3 big down days. And not only that, it's been what's happening during the day, which is, I won't say unusual, but has really intrigued me. And I'll talk about that in the next slide. The other thing here that I'm paying attention to is what's happening with the moving averages, because that is my main sentiment guide. And because we do have the 2 shorter term moving averages still above the longer term moving average, I'd say there's still a little bit of positive sentiment out there. But that positive sentiment has been shifting. You might say it's neutral now because the shortest term moving average has fallen below the medium term moving average. So I think there is a little bit of negative sentiment, particularly in those shorter term traders. And if we start to see those 2 shorter term moving averages fall below the 100-day moving average, that would be confirmation that the sentiment in the Nasdaq has shifted to negative. So let's have a look at what's been happening during the day on trading in the Nasdaq. And this is what's really intrigued me, and really intrigued me this morning when I woke up with the Nasdaq up 1.3%, and then by the end of closing it was down 1.3%. I totally forgot the word I wanted to use, that intraday trading. So sometimes when you're talking on the fly, you can't just think of the word at the moment, you have to just waffle on for a little bit. But intraday trading has really been intriguing when it comes to the Nasdaq the last few days. So this is a 1-minute chart going back to the middle of trading, not quite the middle, but the middle of trading on the 19th of January. And on the 19th of January, we did see a fair bit of a sell-off towards the end of closing. So we did see the Nasdaq fall by quite a bit in the last few hours of trading. And there is a saying that amateurs open the market and professionals close the market. What's this saying? What this is suggesting is that the professionals were selling out of their positions towards the end of closing on the 19th. And on the 19th, the Nasdaq, or the NDX, closed at 15,047, and then it opened higher on the 20th. And we did see over the first 90 minutes a little bit of buying, and then Nasdaq crept up all the way up to 15,3047.62, which meant the Nasdaq was up 2% at its high compared to where it closed the previous day. And then I woke up a few hours later, and at that point in time, the Nasdaq was still up 1.3%. But the last few hours of trading, that was a major sell-off. You can just see how in the 1 minute chart here, the precipitous fall in the Nasdaq was quite extreme over the last few hours. A lot of selling came into the market, and it closed at 14,832.69, which was down 1.3% for the day. So overall, there was a 3% shift in the market during trading on the NDX on January the 20th. So this is another reason I'm a little bit bearish, because we have seen significant difficulty with the closing of the Nasdaq both these two trading days. A lot of selling coming in towards the end of trading. I've already mentioned that we have seen lots of buy the dip opportunities since COVID-19 financial panic, at least 5 in 2021 or something like that. Anyway, and this was an interesting article I did find on Market Watch by Mark Cumbrae, and he did talk to analysis, and this analysis said one reason the stock market is squandering big early leads is because we've shifted from buy the dip to sell the rally. And this is actually really important, because when a company's share price, and I'm just equating this to a company's share price, when a company's share price is in an uptrend and you see the company's share price actually dip a little bit, that's when you buy some more, possibly buy some more shares. So that's like an accumulating phase of the cycle. So buy the dip is a bullish sign. That's when you accumulate your holdings in a company. But sell the rally is the complete opposite. That is saying that the share price of a company is at a downtrend, and if you keep holding those shares, whenever you see the share price rally, that's when you sell out a little bit more. It's sort of like a distribution signal, and a distribution signal is actually a fairly big bearish sign. So it does seem like we are potentially moving from a bullish scenario to more of a bearish scenario, and that's why I have become a little bit more bearish now when it comes to the American markets. And of course, what's happening with the American markets more than likely will translate to other overseas markets, including the Australian markets. In the State of the Markets video I did a few days ago, I also showed the Russell 2000, the RUT. And the reason I showed you this is because there was a real solid support line at around 2140 for this index. And we had seen, which is portrayed by that horizontal black line, and whenever the Russell 2000 hit that support line, we did see it rally. And in fact, we did see the Russell 2000 move below that support line on about 4 occasions, or actually 5 occasions. And every single time it fell below that, there was that buy the dip opportunity. And when I did the last video, I did mention it was just above it, and it'll be really interesting to see what happened with the future of the Russell 2000, because if we did see this index fall below that support line on strength, that would be a concerning sign. And it has done that in the last 2 days. It fell well below it on January the 19th, and it's continued that downtrend in the last trading days. So a very bearish sign when it comes to the Russell 2000. So what's going to happen on the last trading day in the American markets? Well, the futures were down quite big initially. In fact, the Nasdaq futures was down 2.15% at 6:15 p.m. Eastern Standard Time. That Eastern Standard Time is in the United States. Doesn't mean we'll see the overall markets fall. Last time I did have a look, the Nasdaq futures was down by about 1.3%, and this this bearish signal in the United States has translated to the Australian markets. So last time I looked, at about 30 minutes after opening, the small ordinaries, the XSO, was down 1.5%, and the XGO, which is the ASX 200, was down 1%. Now, it would be a good sign if we do see the futures rally. That would mean there is a possibility that the Australian markets also rally, because the Australian markets do look at the futures, and sometimes you will see a bit of a disconnect between what happened with the American markets overnight and what happens with the Australian markets, and that's all because of the futures. And last thing I want to show you is Netflix. So I really don't look or follow Netflix at all in terms of the company. I do have a Netflix count. But we have seen share price of Netflix be under serious pressure since the middle of November. Share price has fallen from a high of $700 to a current price of $508.25. Now, I did receive a notification. They did reveal their quarterly results or something. Did ping up on my phone, and so I went to see how the market was reacting to that. So this is post-market, and in fact, the post-market suggests that Netflix share price might be under a fair bit of pressure on open on the last day of trading. So it is down 20% in post-market. Overall, a lot of other companies in the Nasdaq are down post-market because the futures are down as well. So really interesting to see what happens on the American markets, particularly the Nasdaq overnight. So that's the last day of trading, the Friday. And it wouldn't surprise me to see a little bit of a rally, particularly in the last half of the day. Maybe we'll see a bit of a buy the dip opportunity right there. But when you see 3 big down days, you will eventually see a little bit of a rally. You might call it a dead cat bounce. So it wouldn't surprise me to see that happen with the Nasdaq. But really interesting to see what happens with Netflix share price, because post-market down 20% does seem a little bit extreme. That's all I have for this video on the US markets. Bears are winning. I'm not talking about Chicago bears, but I'm always a supporter of bears. It is my favorite animal. In fact, when I was 6 years old, I was actually bitten by a bear on my finger. And when I say bitten, I'm using that term a little bit loosely. My finger was torn up by a bear, but it's a long story, so I won't get into that right now. So I'm always supporting the bears. So go bears, and bears are winning right now. It doesn't mean they'll keep on winning over the next few trading days, next few weeks, or next few months, but they are showing a little bit of strength right now. And because of that strength, I'm a little bit bearish. And because I have been bearish or neutral, I do have a little bit of cash on the sidelines. So if we do see a little bit of strength in the market, I'll deploy that cash. But if we see the bears keep on winning, I'll actually increase my cash levels, waiting for a bottom, which could take 1 year or even 2 years. Who knows? Because sometimes bear markets can last a long, long time. So the last thing I should mention in this video is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.